So traders, right now I see that there are a lot of bubbles forming in the stock market right now, and I want to give you a bit of a view on what I see happening right now in the market. Also want to share with you some examples of things like the DE40, Netflix, Microsoft, eBay, Nvidia. I want to share with you those stocks because I want to share with you exactly what tends to happen when we start to get these bubbles forming and why it's important to start to understand this right now because we're getting very close towards this bubble sort of correcting. And we can actually also see when it comes to the actual markets itself. When it comes to this war sheet cheat sheet, you can see where we are right now. And I'm seeing across the board, gold, silver, even the mining sector. I'm seeing right now that there's a lot of sort of optimism around because we've had extraordinary moves across all markets, right? Like all markets. Even the mining sector have had incredible runs to the upside over the last couple of years. These last 2 years, with the corrections in place, have had such incredible moves. So I'm just trying to give you a bit of a picture of what's happening right now, what we could expect to see right over the next, say, why I actually expect to see a correction coming real soon over the course of this year, and why I'm actually also expecting to see a much larger correction next year. But the thing about the correction next year is I actually see that next year, even though we get a really big correction next year, maybe a recession and so on and so forth, that's going to be a catapult for just one of the most incredible bull markets we've ever seen in the markets there. So that's what I want to share with you in today's video there, guys. Guys, make sure you come down and actually join me for the free training that I'm running today. If you want to learn exactly how I trade the markets and my trading system, everything like that first link in the description, guys. So one of the things that I was looking at here when it comes to these markets is I'm doing some analysis today to get ready for this week coming up. And I started looking across all markets. I'm like, what's happened with all markets here? So I'll bring up this level from here. And I'll bring up the trading view here. Okay, so this is the trading view that I actually use. And one of the things that I was starting to look at was this level here. So let's go to here. And this is obviously looking at all these markets here. But if I squeeze my charts up here to get a much better view here, one thing that we've learned in the markets, and you'll see this across all markets, is that when things start to get really vertical in the markets, in any market out there, we start to get to the frothiness into potential bubble territory, and this is where we can start to get the corrections happening. Okay, so I'm not expecting a large correction now, but when the market starts to work its way through like we're doing right now, there's warning signs that start to say, okay, if I'm looking to get involved with this thing right now, then I need to be concerned about what's happening right now and what's going on. So in any particular market, so for example, even back here, right? Look at this back here. Notice this back here. We had what? Up, right? We had small little pullbacks, but it was very nicely to the upside, right? When we just kept going up. But look what actually ended up happening through here, right? We had a really sharp and fast correction through there. And then the market did nothing from there. So when we start to look at these here, now I start to look at some of the actual stocks here. Once again, whenever we start to get, and this is where you want to start to really be sort of, the warning caps should be on right now because the market starts to give us these warning signs. So if I show you some examples here. So if I show you, for example, the DE40. This, and again, if you understand these markets, you understand why we should be concerned about things. And one of the biggest mistakes that I'm seeing people do is that they add, but John, this time is different, but John, the central banks are buying, but John, and you insert that there. But if you actually look at the way these markets really work on a deepest level, how do they work? Look at this here. We had see that big vertical move to the upside? What's that big vertical move there? Big vertical move, and then we had a big correction, and then we had another very big vertical move, and we didn't get a big drop, but then we started to go through one of these phases, didn't we? This is how all markets work. If we go through an extraordinary bull phase for a very big bull phase like this for a couple of months, it's either then going to it's either going to correct. So we're either going to see this here come down like this here to correct, or we're going to see where the market just does nothing for 2 or 3 or 4 months while it's actually refueling and resetting. So they're the different scenarios you can see here on the DE40. As an example here, look what we got here. We've got the sideways pattern here, right? See how it's just the sideways movement there? This sideways movement here is also the reset. But the reason why I mention this to you is because if you're a trader of the markets, right? If you're an actual trader and you're looking for, okay, I'm looking for that next move, then the FOMO, you don't want to be getting in the markets where you know there's a high probability of it not doing nothing, especially when you start to look at things like options and stuff like that. So we can actually see that through there. And if I show you some examples through here, and again, what I'm all about, guys, is I'm all about, as you know, what we're looking for is we're looking for good opportunities in the markets. But we're also looking for things in the markets that tell us don't get involved with this right now, right? Because it's actually a very dangerous time to get involved with it. Step back, don't do anything right now. And as you know, sometimes the best thing to do is just to step aside and just not do anything. And if we start to look at things like, for example, Netflix. Now, as I said before, all markets do the same thing. What is that? We go for a big bull market through there, a very big bull phase. And if we see that in the charts, you know there's either A, this coming, or B, this coming. Right? Look at this here. Very big vertical move up, and we had a really sharp correction. Look at Netflix here. Netflix at the start of 2025. Look how vertical that is. Right? Netflix to the moon, so on and so forth. But what's been happening with Netflix lately? Netflix has had so far, from the top to the bottom, has had a 15% correction so far. So the purpose of me saying this to you here is for me just to educate you around that when things like what's happening in the stock market now is happening, you start to get a lot of optimism. And because most traders don't understand this one simple concept, which is how these markets operate, then they start to get sucked into the FOMO of where we're at, right? So for example, even Microsoft. What happened with Microsoft? Why is Microsoft actually having a bit of a drop right now? Because it has had an extraordinary quality move. We've had so much move to the upside. It gets very frothy. And now so far, Microsoft is actually down around about 10%. And the reason why it's down about 10%, and it may have more to go, because we've just had a very big extraordinary move. And so for me, I don't know exactly when the top is in, but when we start to see these very big moves to the upside, and we start to see this type of action here, this is the warning sign to not get involved with it. But it's also the warning sign to tell you that no, we're not getting started for a massive move to the upside, because we're actually running out of steam. And this is where a lot of traders get it wrong in there. Like even Amazon, right? Look at Amazon. And so in any particular market, you see Amazon and eBay. Look at eBay. Whoa. Look at the drop in eBay recently. See that big drop in eBay? Why is eBay dropping? If we squeeze our charts up and get a good view of it, yeah, we had a little pullback through here, but look at that move from there. Look at all that move from there, and then we had what? And then we had this drop to the downside. You see what I'm saying there? So all my job is just to try to guide you down the right path of saying, oh, I need to step aside. I need to just because the bubbles form, right? Matter. And every single scenario you see the market start to have some big vertical moves, like here, like that through there, you start to get corrections. Look what's happening with Microsoft now. Nvidia, look at Nvidia. Why is Nvidia holding here right now? Right? Look at this move. So look, see this big move up? Now look what Nvidia is doing. Just going sideways. By the way, with Nvidia, bit of an FYI, because everyone's all about Nvidia now, right? if Nvidia does actually have a break up to the upside, it's probably going to be a false breakout, and we're probably going to reverse, and then we're probably likely to see a correction out of that through there. And so you can see, like, this is all I am, right? Because as a trader myself, I'm just looking for those opportunities to, be cautious. And that's where, like, for example, even gold. As gold made this extraordinary move from here, the start of this year up to here, my job as a coach was to say, I know you guys are looking to load up on some call options now, but it's the wrong time, right? Look at this here, up, 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 and now we're just going sideways through here. And so every time we do, and as you can see, no matter what market is, every time we get these vertical moves in the markets, my job as a coach is just to show you examples as well too, to show you that this is the wrong time to be getting involved with the markets, because it's a low probability time. And this is where I don't want you to be thinking that this time is different, because it's not different. And everything that you're saying, central banks are buying. Central banks have been buying for a long time. The debt bubble's been an issue for a long time. What you're saying right now is nothing new to the markets, right? But the charts do tell us that. So, and now we've gone through one of these phases. So for a trading opportunity, there might be, and yes, I do see there might be one last push coming out of the gold market as well too. And even silver from here, silver might be getting ready for a nice push back to the upside. If I bring this chart up to here, actually, if I bring this as the weekly chart here, so yes, silver could be getting ready for a nice move up towards that 40, 42 level, but we're getting very close towards the end of these moves. And if I even look at things like the GDX, right? Look at the GDX. The GDX, while we're getting very close towards the all-time high through here, we've had an extraordinary quality move. Look at this GDX move here. Yes, we've had our little pullbacks, but even the mining sector is starting to become a little bit frothy. Now, when I say frothy and bubbly and all that sort of stuff and corrections, I simply mean that we just, if you, again, it's like how markets work, right? Markets don't go straight up, do they? Right? We've had this very big move through here on the weekly chart. We may see something like that, but what's inevitably going to happen, right? The market's going to go down. Now, why is the market going to go down? Because that's actually the way markets operate, right? Big bull markets are what? Higher lows, right? Higher low, upward trend, big bull market. Yes, John, tell me something new. Okay, well, if you know that's the case, and you know that that's what markets do, they create higher lows and they go through an upward trend, well, you do know if something's been pretty strong to the upside and it's had very little pullbacks over the space of a 6 to almost 12-month period, you do know there's going to be a drop soon coming to what? To create the higher low. So all the drop that's likely to come, all that is just the market pulling back to create a higher low. So, and even on the silver mining sector as well too, right? We're starting to break out from here. I do see that this is let's go to this one here, this guy here, right? Yes, we are breaking out a big level from here. So yes, we still could actually have some more upside to come, but look at the move that we've had so far. All this here, and the reason I'm saying this, guys, is because over the next couple of weeks, if gold does break out and silver breaks out and we start to continue getting more moves and we see another move in the stock market, we're towards the end of this phase, guys. We're towards the end of the move. So as I said before, when it comes to this PowerPoint that I actually brought up with you guys at the start of the video, I talked about this here, right? This here. And this is where you would just want to be sort of, we are at this level here right now. We're just getting like the market's not even going to pull back, and you get all this sort of saying from there. And if you just be sensible and be smart about your trading, and that's what I'm about. That's all about, right? That's all I'm about. I'm about just let me just be smart about my trading and be also on the cautious side of what's going on, because even on the mining sector, right? The mining sector has actually had an extraordinary quality move for this year, right? This year, the mining sector's up almost 80 something percent. So while I see a correction coming, I don't see a complete bear market. What is that? I just see a correction coming to then start the big bull market. So that's what I'm seeing right now, guys, around the bubbles. But I do see that next year I see a much larger reset coming. Now I want to show you that this is the short-term picture, and then going into next year, I see everything's just too bubbly right now. Right? There's so much frothiness in the markets. There's a lot of bullishness, a lot of optimism, and all that sort of stuff around the markets right now. For the markets, this is a warning sign. And a lot of the warning signs we don't actually see until it starts to become too late. And this is a warning sign for a much larger correction. But hear me out here. As I talked about at the start of the video, I want to share something with you here. Right? So when I say a much larger correction, if I look at all markets around here, I see the next 2026 potentially being a much larger correction. And we're already starting to see it, right? We're already starting to see the bubbles in the markets and so on and so forth, again, around the Dow Jones. But this is the Dow Jones big long-term chart here. And so I'm trying to, now I've talked about what's happening right now, right? So we still may have a little bit more upside to come. There's probably maybe some short-term corrections this year. But then I see as we go into next year, we're probably going to head into a recessionary period. We all do know that's coming. And within that, everything should start to see some moves on the downside. And the reason why I'm saying that, guys, is again, let's just be smart about the way that we do things, right? Let's not, there's a quote out there that we can ignore reality, but we can't ignore the consequences of ignoring reality. And what do I mean by that? If, like, for example, a lot of people are really big bullish on gold, but you do know that in every single situation, in every single scenario in the markets, that yes, while I see one more push coming in gold, you know we're getting towards the end of the bull market, right? The bull markets just don't keep going on and on and on and on, right? And as you can see, the average bull market really lasts around 2 years. As you can see, this bull market's here that really started here around 2010. And it was actually there, right? So as you can see, roughly 2 years of a big breakout after we broke out. It was roughly 2 years before we ended. So, and even this point through here, right? So that point through there to there, as you can see, that phase through there was what? Roughly 2 years. So we're getting towards the end of this 2-year phase where big bull markets actually form in the markets here. So one thing that I see coming is, and if we look at this from a much larger perspective in this here, and let me just bring up this logarithmic chart here, because I think this is much easier for me to be able to show you here on this one here. And if I bring on the actual, I'll go to the GLD, okay? So my target up here on this is the target where I believe we're likely to get to on the GLD, which is that one there, around 380. While I see that coming from here, this is a big long-term monthly chart, by the way, okay? Big long-term monthly chart. As you can see, that the danger of this here is, just look at this massive move to the upside. It is just continued to go on. This is bubble territory, right, guys? Bubble territory. So over the next 6 months or so, we're probably likely to see that, and then we're probably likely to get a nice hard correction through the GLD, through gold. But what is that if you look at the large picture? What is that? That is what? That is just up, and then it's down, and then up, and then down. And then we've had this up move from here to here. We had an up, and then we have a down, and we have an up, right? And as you can see, this is what markets do, right? This is how markets work. They operate like this. It's not like it's a surprise. It's not like, no, gold's never going to go down. You know that's not true, right? Of course gold's going to go down. Gold's gone down, 5 to 8% many times in the last couple of months. You know what I'm saying? So yes, of course we're likely to get this drop here. But this big drop that's likely to come maybe next year, something like that, is what? It's just an overall correction in an overall big bull market. And this pullback through here on the large picture, yes, then I see some extraordinary quality moves coming on the other side. But right now, over the next couple of months, we may, again, I expect to see more upside out of gold. But if you look at what these markets do and you use history as a guidance to give you a high probability, what you don't want to do is you don't want to see what happens most of the time in the markets and then look at that time, the 10% of the time that it doesn't, and therefore you want to try to trade on that, right? Because as you can see, most of the time we eventually do go through these thingy. So this is what I'm seeing right now, what I see there. But if I also look at the big long-term picture on, say, the Dow Jones. On the Dow Jones here, this is the long-term picture here on the Dow Jones. And so while I see we're in a bubble territory, this is a long-term monthly charts. This here is COVID. This here is the recession fears. This here is the tariff, as you can see. So while I see we may get a little bit more upside to come, if we do get a 20, 30% drop, that's all down through there. Let me bring on the S&P chart. This is the S&P chart. So as you can see that, and it just happens time and time again, doesn't it, guys? Even on the big long-term picture. And if you just, and this, I know this doesn't make sense to a lot of people, but you know, remember the 2022 to 2023 recession fears? Why did that happen? Oh, look at that very big move to the upside. And then eventually what? We end up getting what? A good pullback. And then now we've had a bit of move to the upside. Here, we may get that through there. And then next year we have a really big pullback, 20, maybe even a drop down to this level here, and then away we go again. So you can see the small picture, the short-term pictures, yes, we're getting very frothy right now. So my job as you guys is that I just want you to be able to, when there's warning signs right now in the markets, I just want you to say, you know what, I'm better off not trading right now because I'm probably going to lose money. And it's a very low probability time to get involved with it. Let's go find some things that's got high probabilities and we can start to go down that path, right? And now we can see this level from here. So I would rather you when trading, I would rather you wait for the correction first. Because as you can see, whenever we do get the correction, that's, if you look in especially when you're just looking to buy the market, right? And you're looking to get involved with the markets, you know the best times of what? When we've actually got through the corrections. The worst times is what? When we've already made new highs, up. See all these times up here? That's the worst time because within a few months it goes through a rollover and you got in a really bad time. Makes sense? So, and you can see, and if you just look at this from a market perspective, and it's really simple, right? What is this at the end of the day? The market goes up for a while. It might be a year or two, and then eventually we go down for a little bit and we go up a little bit. That's all this is doing, right? It's just a simple, really big bull trend overall. And this is looking at the big long-term monthly charts from there. So there we go, traders. This is the whole thing around that what I'm seeing right now where it comes to the bubbles. Why I see there's a larger reset before a massive new secular bull market resumes.